Good morning, everyone. This is Kim Schmidt, Associate Editor for World Lifestyle Dealer Magazine. Welcome to our latest webinar. I'm joined today by our Managing Editor, Lynn Woolf, who is going to be presenting some insights and analysis from Rural Lifestyle Dealer's 2017 Dealer Business Trends and Outlook Report. Before Lynn gets started with her presentation, I've got a couple of housekeeping items to go through. On your screen, there's a white arrow and an orange box. You can click on the arrow and choose Question to open up a question field. This will allow you to submit questions at any time during the presentation, and time permitting, we'll look to answer as many of those questions as possible. And if we don't get to all of them, we'll send the remaining questions back with Lynn so she can answer them. And then we'll put those answers up on the website along with the archived video replay of the webinar so you can go back and review it if you'd like. If for any reason your internet connection or even our connection should happen to fail during the webinar and it looks like it has been interrupted, just go back to the email you received earlier telling you how to join the webinar and you can re-enter that way. Okay, we're ready to get started. Thanks again for joining us, and Lynn, let's take it away.
Good. Well, thank you very much, Kim, and thank you everybody for joining today. Looking forward to presenting the data from our report, also looking at the trends, and after the presentation, getting your feedback on what you're seeing in your dealerships as well, now that we've gotten a couple months into 2017. In terms of the survey itself, this is our 9th annual survey, and really the only one of its kind in the industry. So we've been looking specifically at this rural equipment market, how it's been growing and changing and evolving over the last close to 10 years. And so we have some good, strong data to share with you today. We had 170 respondents. This is a very good number for us up for previous years, and got some really interesting data from the respondents. In the survey, or in the presentation, we'll be looking at North American dealers as a whole, as well as looking at comparisons to major manufacturers, as well as size of dealership. In the complete report, the 40-page report, which we'd be glad to send, we do a further breakdown based on brand as well. But for this presentation, we'll focus on that. In terms of our readers and who would be responding to the survey, about 50% classify themselves as management or ownership. And so this gives us a good sense that they know the numbers of their dealerships that they're sharing. And you can see the breakdown from there. And then in terms of revenue per year, about 70% say they have $2.5 million or more. And further defining the survey respondents, about 83% from the US, and then a good representation from Canada as well, about 17%. And then we do break down in the survey based on dealership size, based on employees. So about 72% say they have 1 to 20 employees, but then a good representation as well from that mid-sized dealership of 21 to 40 employees, about 22% are in that range. These numbers are interesting on a lot of fronts, but you can see that our readers have been serving the rural lifestyle market for more than 16 years. About 70% of them say that they've been serving the market for more than 16 years. And so when you look back 16 years ago on what the market was, it definitely wasn't called rural lifestyle. So our readers were really serving a segment that was in the early stages of being defined. And since then, the market has continued to grow. We asked in this survey, we ask every year how much your customer base has grown in the last 5 years. And you can see 12% say that their market has grown by 20% or more. And I don't know really many other industries who can claim that kind of growth. And then even half say 5 to 19%. And what's interesting about that number too is that is reflected year after year. So this isn't just a blip and they had a big growth recently. This is just, I've been seeing this as long as I've been doing the survey, which is almost 5 years. These are the compact and utility tractor brands that are represented in the survey. 30% of the respondents are carrying Massey Ferguson. From there, Kubota, New Holland, John Deere, and Case. We asked our dealers as well about their main zero-turn mower brands that they were carried. And Kubota, 25%. And then from there, Cub Cadet, Hustler, John Deere, and Simplicity. When you look at those numbers, though, you can see that there's a good breakdown across those brands. So we don't have just one brand dominating, and so I think that speaks very well in terms of the representation of the brands in the survey and the validity of the data presented. When we look at the data, we also look at other factors influencing the rural equipment market. Generally, we look at the unemployment rate as one of the big influencing factors. Recently, 4.7% for unemployment rate. When we look at last year overall, it ranged from 4.7 to 5%. So economists claim that about 5% is a fully employed workforce. So that speaks very well for our customers and our dealers. We also look at home building as another economic indicator. One index that I watch is from the National Association of Home Builders, the Wells Fargo Index, and they do a builder confidence index. It was recently at 70. And when you look at last year, which was a good year, it was at 58. So those are some really strong factors to show where the market is and what our customers are experiencing in their properties and well as their spending. And then we look at information from the Association of Equipment Manufacturers. This was unit sales in February. You can see the under 40 horsepower tractors were up 21%. And later on in the survey, you'll see that segment repeat again and again in terms of it being a very strong segment this year. And then you can see how that compares with some of the higher horsepower tractors as well. So very good in terms of overall economic influences. We asked our dealers about the market served. Of course, the majority are going to say they serve hobby farmers and large property owners. But you can see the breakdown here. And again, I think this really shows the strength of our dealers and that they have a very diverse customer base. So as many are serving landscape contractors as are serving municipalities and parks. So a very diverse, strong segment. So now to dive into the numbers, if we look at overall revenue for 2017 versus 2016, if we look at the little or no change and then going on up to the +2 to 7% and 8% or more, this year about 50% expected their overall sales to be in that positive range. And you can see some of the declines as well. Compared with last year, about 60% expected sales to be about the same or up 2 to 8%. Another way we view those numbers is to look at the weighted averages. So in a weighted averages, we would toss out the little or no change or about the same and just compare the increases with the decreases. And the analysis for this year shows a positive sentiment of 1.61. That's down slightly from last year, which was 2.42. So it's tempered just a bit, but still strong. In looking at aftermarket revenue, this generally is always stronger than our total revenue. And you can see here that we have about 51% are saying 2 to 8% or more, little or no change or 2 to 8% or more. And that compares with last year, about 54% of dealers expected their aftermarket revenue to be about the same or up 2 to 8%. So just slightly different than last year, but still very strong in terms of aftermarket revenue growth. We broke that down further and looked at in terms of the products behind that growth. And this is looking at this is looking at unit sales. And you can see here that zero-turn mowers top the list of the top 5, with 60% of dealers expecting growth of unit sales growth of 2 to 8% or more. Perennially, zero-turn mowers top this list. It's been top of the list for the last few years. So it's continues to be a growing segment. You can see here that tractors less than 40 horsepower that we talked about earlier from the AEM data, how it shows up very strong here from our dealers as well, with 56% expecting unit sales increases of 2 to 8% or more. Utility vehicles is number 5. This is a product line that's always been in the top 5 for the last few years. Some of the other ones, like rotary cutters and front end loaders, some of those swap out from year to year, but generally zero-turn mowers and utility vehicles are in the top 5. And mostly one of the tractor lines, either tractors less than 40 horsepower or 40 to 100 horsepower, are always in that top 5. Again, looking at the weighted average perspective for the categories themselves, in terms of the top 5, we bounce back and forth between being stronger than last year or down from last year. The zero-turn mowers is down from last year, but you can see in terms of weighted average, compared with a 3.41, a 2.54 is still indicates strength there. And again, that tractor's less than 40 horsepower, you can see how it's up from last year. Rotary cutters about the same, front end loaders up slightly, and then utility vehicles are down from last year. And then when we look at weighted average perspective for the bottom 5 categories, in the survey, we look at 26 categories in all. Generally, feed and fencing is always at the bottom of those categories. And you can see it's just generally down from last year in terms of the weighted average. And really not a lot of our dealers are really carrying feed and fencing, so that influences that as well. We ask dealers in terms of the products that they're going to be adding this year. Utility vehicles takes the top spot for that, with 36% of dealers saying that they expect to add utility vehicles. Utility vehicles for this question also maintains that top spot over the last few years. Again, you can see that tractors less than 40 horsepower is maintaining a strong position here in terms of about 33% expect to add that. And then you can see zero-turn mowers again in that top 5. And then we do have some swapping out of positions when we look at year to year in terms of what else might make the top 5. But generally, utility vehicles and zero-turn mowers are within that top 5 from year to year. And one thing I did want to just share in terms of utility vehicles, it's been very interesting to see the evolution of the product over the last few years, over the last 5 years or so. We're transitioning from the work vehicle to the racing type vehicle. In my small town of about 2,000, I see the racing type UTVs just going down Main Street. I see utility vehicles parked in the high school parking lot. So it's interesting to see the demographics across that utility vehicle segment and in terms of what people think they want or they need. Another segment we look at is rental. And we've just started measuring in terms of dealers carrying rental, having a rental department. This past year, or in the 2016 survey, and again this in the 2017 survey, about 38% of dealers say they offer rental. And you can see in terms of the categories rented, categories of equipment rented, it's really for some of those larger jobs that our real lifestyle customers are doing, or those jobs where landscapers might need a specialized piece of equipment. In terms of rental overall, when we talk about it with dealers, there seems to be some differing camps on it. Some say they want to stay away from it altogether, as indicated that almost 60% say they aren't doing it at all. Some of it's related to the hassle of the equipment coming back damaged, or concerns about liability issues or training issues when the equipment leaves. And then some other dealers are telling us that it's really a significant selling tool for them, that they show off the newest models in their rental fleet. So that gives a way for their customers to see the newest models, to try out the newest models, and then some sell out of that rental fleet. So they're able to offer new models with low hours at less, close to used prices then. And then others tell us as well that in the rental fleet, that they are trying out other things. We have a feature in our spring issue where we have a rural lifestyler who bought a mini excavator to do some land management tasks. So there might be some opportunities there in terms of just exposing rural lifestylers to different kinds of equipment. In the survey, we also broke it down based on size of dealership. And we talk about the large versus small, which is large dealerships of 21 or more employees, compared with the small dealership at 20 or fewer employees. And one thing I think too that shows the strength of our readers and the strength of the survey is that we have a good representation of dealers who have single stores to those who have multi-stores. So it makes for a very interesting market for us to cover. And then if you look at combining some of these, if you look at the little or no change to 2 to 8%, the small dealerships are slightly higher. 90% of small dealerships expect total revenue to be as good or better than last year, and that compares with 87% for large dealers. And then when you break down the numbers further, with large dealers, they about 50%, 52% expect growth in the 2 to 7% range. That compares with about 37% for small dealerships. And then in terms of declines, they're about the same in terms of overall declines, with the smaller dealerships expecting just slightly higher declines of 2 to 8% or more. We also looked at aftermarket revenue, comparing the large versus small dealerships in their forecast, and nearly 98% of large dealerships expect aftermarket revenue to be as good or better than last year, and that compares with 89% of small dealerships. So our larger dealers are more optimistic about aftermarket revenue, might be related to having larger service departments. And then in terms of declines, the small dealers are more pessimistic, showing declines of 11%, expecting declines of 2 to 7%, and that compares with about 2% for our large dealers. We also asked, based on size of dealership, the ranking for outlook. And you can see here for the large dealerships, again, that tractors less than 40 horsepower is showing up number 1, followed by zero-turn mowers, rotary cutters, skid steer loaders, and utility vehicles. And that compares with small dealerships who are ranking zero-turn mowers as number 1. But again, tractors less than 40 horsepower are showing up in that top 5, as well as a range everything from lawn tractors to front-end loaders. And both large and small dealerships also consider rotary cutters to be a good growth opportunity for this year. We broke things down based on brand and looked at optimism based on brand. And you can see for total revenue, Kubota ranked number 1, followed by John Deere, Massey Ferguson, New Holland, and Case IH. And then when we looked at aftermarket revenue, Massey Ferguson took the top spot, followed by Kubota, John Deere, Case IH, and New Holland. And in the full report, we have an extensive breakdown based on brand that we can share with you. We also looked at, based on brand, how dealers would be expanding their lineups. Massey Ferguson, about 53% of dealers said that they would be adding UTVs. That took the top spot for them. For John Deere, 44% said tractors less than 40 horsepower. Case dealers are adding higher horsepower tractors. About 46% are adding tractors in the 40 to 100 horsepower range. New Holland dealers, 39%, adding hay tools or balers. And then for Kubota dealers, about half are adding skid steer loaders. And some of that is influenced by the new models being offered as well. In addition to just straight numbers, we also tried to get an idea of what dealers were facing in terms of management issues this year. And so you can see how we broke it down in terms of most concerned about, concerned, or not concerned, with finding good employees taking the top spot for the most concerned about, challenge, with 60% of dealers expecting or saying finding good employees is the issue they're most concerned about. And that really has been the top issue for the last few years. Healthcare programs and cost is number 2 this year. It took over the top spot when the Affordable Care Act was being introduced, but generally finding good employees ranks number 1. Low sales margin also ranks up there each year as one of, definitely within the top 5. One thing that's interesting to look at, we hear a lot of dealers talk about competition from big box stores. There continues to be expansion on big box stores. Some dealers tell us that they have as many as 5 within 20 miles from their dealerships that they're trying to compete against. But then when you look at it in terms of whether they really are concerned about that compared with some of the other challenges, about 13% that's the issue they're most concerned about. So the issues closer to home, closer to the management of dealerships are really top of mind for dealers. We looked at branding not only in terms of what equipment line is going to be carrying, but in terms of brand awareness. And some of these, the data that we'll present now going forward is what you can do when we have a strong market, we have good economic growth, we have expanding product lines, and so what you can do as a dealer to take advantage of that. And we asked about brand awareness in our survey, and you can see at least 53% of the time dealers say that customers come in with a brand in mind, and 10% having a brand in mind almost always. So our rural lifestyle customers are doing a lot of research before they come into the dealership. They're doing research online, they're doing research on social media, they're looking at reviews. And so they come into your dealership not just with a blank slate, they know what kind of brand that they're looking for. And the second part of that, which also bodes very well for dealers, is that they're accepting your recommendations. Our dealers say that about 64% of dealers say that most of the time their recommendations are accepted. So when you look at a customer coming in with your brand in mind and they're trusting your dealerships to validate the research, this shows that you're really on a very good path for a sale based on that brand and expertise. Another thing that our dealers do every year, of course, is invest back into their businesses. This year, the top spot for investments was shop and service modernization, with 52% expecting to do that. And that goes back to some of the higher margins that are showing up in our shops and our service departments. About 46% expect to make improvements in their retail space. Those tend to go back and forth in terms of the top spot. A few years ago, there was more dealers were investing in retail spaces. So some of that might have already, those investments may have been made and dealers may be going back to their shops now. About 32% expect to invest in business information systems. That's a strong number considering you're not going to invest, you're not going to have a new dealership management system every year. So those are how our dealers are investing back into their businesses. Something else you can do in terms of looking at data outside of our industry as well. In our rural equipment intelligence column, we looked at some other economic indicators. One thing you can definitely watch is the single family home sales. You can see how closely that tracks with the U.S. For the under 40 horsepower tractor sales. So if you're looking to establish some trend lines going forward, definitely look at that indicator. That number came from the National Association of Realtors. And then if you look at employment from the Bureau of Labor Statistics for the landscaping services, again, that's another number to start looking at some trending. And you can see how closely that tracks with under 40 horsepower tractor sales. One other indicator is personal income. It really doesn't show any trends in terms of under 40 horsepower tractor sales. So you'll want to focus more on the single family home sales and the employment and landscaping services throughout the year if you want to see how things are trending. So throughout the year and in our winter issue when we presented these surveys, We also look at how you can build your team. You have a lot of opportunities this year, so what you can do within your dealership to take advantage of those opportunities, especially in the service department with those higher margins. Our expert Bob Clements of Bob Clements International talks about the 6 positions you need in your service department: service manager, service writer, warranty writer, shop foreman, service techs, of course, and then the service coordinator. Now, based on the size of your service department, you may not have each of those split out, but you'll want to be thinking in terms of those overall duties. And this was covered in a recent issue, and we can also send you the article as well for more descriptions about what each of those are. But one thing I wanted to pull out is that sometimes in dealerships, if you've got a really strong service tech, one way for them to advance is to move into the service manager position. But you want to be careful about that as well, though, because not everybody who might be good fixing equipment is good fixing customer complaints. So just something to consider as you're looking to shore up your service department. One position that Bob Clements said has largely been ignored is the shop foreman position. And the shop foreman is, if you look at their daily activities, about 5 hours would be spent within the service department, but then about 3 hours would be spent just overseeing the workflow. So they're another one of your real strong ATECs that are keeping things moving in your service department and offering a level of support for your service manager. And then something else to consider for really any size service department is the service coordinator. And this is a person who would be cleaning up your shop or washing equipment, so that you're maintaining focus for your service techs on the jobs that are earning you money, as opposed to some of these prep jobs. And Bob Clements had suggested that you should have one service coordinator to support 5 service techs. And he recommends building the cost of that service coordinator, their wages, into the job. So that might be something that you might want to consider this year. Also, if you look at building your team, it's really important to have your entire team engaged in the dealership and also engaged in the success of the dealership. And so Bob Clements recommends 3 types of compensation. The first one, performance-based bonus. This is pretty straightforward for people like your sales team or your service techs who are getting rewarded based on their individual performance. But then there's some other departments, specifically like the parts department, where a team bonus might be a way to give them incentives. With a team bonus, it keeps one parts department employee from just focusing on only selling certain parts to certain customers who are buying a lot of parts. So it really kind of keeps that teamwork aspect going within the parts department. And then the pool bonus is something to consider for just the other people in your dealership, because there's so many roles that are important to the success of your dealership, and you want to make sure that they're also sharing in some of those rewards. So Bob recommends taking a percentage of your performance-based bonus and your team bonus, and then putting that in a pool bonus for some of your support staff, and then that bonus would be based on a percentage of their salary. So, we know from our dealers that finding good employees is really a top concern. So anything you can do to keep your good employees there, is something that can really help take some management hassles away from you this year. An issue that dealers, I think, are struggling with, we talk about this in several of our dealer meetings, is online marketing. Dealers have been doing radio advertising, TV advertising, and direct mail for years and years, and have expertise in that. But now there's a whole new level of online marketing with email marketing and even text marketing, as well as social media marketing with Facebook reviews and posts. So it's become a whole new territory for our dealers to become experts in. And I recently interviewed a company called Signpost.com, and they are an online marketing agency that has an automated marketing software. And they shared their top performing online promotions. And this is based across all industries. But I think it was interesting in terms of maybe some ideas that you could borrow for the spring season as you are bringing people into your dealership for open houses, and look for ways to incentivize them coming to your dealership. One of these ideas I thought was interesting, especially, was the 5% off when you register for the email list. You can't do good online marketing unless you have good emails. And those emails are people, not just any email, but people who have shown an interest in your dealership, who say that they want more information from you. So by offering just them a small incentive off of some item to get their emails, you can start building this spring a really good, strong email list. So just some ideas that you might want to test out. One other thing to think about this year is the rural lifestyle customer in terms of their whole shopping experience. Mike Wiles, he's our retail expert. He's Ask Tractor Mike on YouTube, and he talks in terms of the car dealers and what we can learn from them. Approaching customers, number one. If you come from the ag world, some of the farmers know a lot about equipment. They might not want to be approached by a salesperson right away. They may want to check things out first. But our rural lifestylers, it's really important for them to be greeted. You want to be careful about being overzealous in terms of that sales, but they've definitely got to be greeted when they arrive on the lot. They're going to be expecting that. Something else to consider is leasing in terms of rural equipment. Our customers are coming again from car dealerships where they're leasing their cars. They're making similar large ticket purchases at your dealership. So they will be expecting that type of financing from you. And then just generally improving appearances of your dealership. If you think about that rural lifestyle customer and where they might be shopping, for instance, on a Saturday morning, if they're going to their car dealership for a oil change, or if they're going to then on over to Home Depot or Lowe's to pick up something for the house, and then maybe over to Cabela's as well, how does your dealership fit into that shopping experience? Is it going to be a letdown when they leave some of those other places and come into your dealership? So just keep that in mind. Do your own kind of secret shopper in terms of on a Saturday morning, go out to some of those places, see what it looks like, see what the experience is like, and come back to your dealership and see how you're greeting your customers and how they'll feel when they enter your dealership. We also asked some anecdotal questions in the survey, and I especially like this one, which was, what's the best mistake you ever made? And these were some of the answers that stood out for me. One of our dealers said that they tried to be everything to everyone. And so they looked at their inventory and revenue and margins, and then they reduced lines from there. And we asked a similar question in a recent eBrief daily poll, where we asked if you're carrying more or less equipment lines over the last 5 years. And it was really split. 38% said they're carrying more lines than they did 5 years ago, with 33% said that they're carrying less lines. So I think dealers are still trying to figure this out in terms of having what they want, what customers want, as well as what they're able to handle. So this is something that I think we'll continue to poll and see if there might be some changes over the next couple of years. Again, going back to the employee issue, you can see one of our dealers said it was a huge mistake to not have a plan for handling employees. And they talk about fine-tuning that plan with, later on went on to say an employee handbook. And that topic of an employee handbook was also something we asked about in our recent eBrief daily poll. And half of those that responded said that after hiring, they only look at the handbook after a dispute with an employee. And so the handbooks that many dealers are using is really not part of how they're working with their employees. And that might be something that you might want to consider working on, so that you'll want to be looking at those job descriptions, updating them as they go throughout the year, and also looking at your expectations for your employees and making sure that they know what they expect of you. Another comment that a dealer made, he said, firing an employee that everyone said we couldn't survive without. We replaced him with an employee who has a positive attitude. So I know it might be difficult to fire an employee when you can hardly find anybody to take their place, but you really want to analyze some of those employees that might just be time for them to move on for whatever reason. If they're bringing down your entire dealership, or if they're causing other employees to leave because of their attitude, you might need to make some changes there just for the overall mood of your dealership. And each year we recognize a standout dealer. We just finished our nomination process for our 2017 Dealership of the Year. And so we'll be moving on to the next stage of doing some qualification of those nominations. And last year, our winner was Blue River Tractors of Durant, Oklahoma. And I thought this was a really interesting quote from one of the owners, Tim McIntyre, where he talks about going to extreme ends to take care of the customers, how it's cost them a fortune, and how much emphasis they've placed on that. So really something to keep in mind. We are sitting in a really good spot for our market. Numbers are strong, the economy is strong, but if you don't have a dealership that is placing the focus on that customer, none of that really is going to matter. That's really what it comes down to in terms of overall success. Well, that wraps up some of the data and trends I wanted to present here in this presentation. And I hope you have some questions for me. We can keep the discussion going a little bit further.
Yes, we do have some questions, so we will move on to the Q&A. And just to all of those out there listening, if any more questions come up while Lynn is answering the ones that have come in, feel free to send them our way. All right, so our first question is the turf market growing in terms of riding mowers?
Well, this was a question that came in early, so I had a chance to do some looking back at some of our surveys from the past few years. And if we just look at how that the riding mowers would, or we would call them lawn tractors in the survey, how they rank in that list of 26. For 2017, they ranked number 7, 2016, number 5, 2015, number 10, 2014, number 7, and then back in 2013, number 10. So generally, the riding mowers for the last 5 years have ranked in the top 10. And then if we would look at just generally that segment of lawn tractors versus zero-turn mowers, you saw from some of the data that was talked about in the survey how zero-turn mowers is really ranking number very, very high. And really it ranked, looking back, it ranked number 1 all the way back to it ranked number 2 in 2013.
Okay, and then what about lawn tractors versus zero turns? Is there a 5-year trend available?
Yeah, that's the zero-turn mowers is always really topping the list. Always really number 1, except for number 2 a few years ago. So lawn tractors again are making the top 10, but zero-turn mowers are being the segment in most demand.
Okay, and then what seems to be most popular on the tillage tool side of things?
In the survey of the 26, really in terms of tillage, because that's really outside of what a lot of what our real equipment customers are doing, outside of maybe some that are doing food plots, that kind of thing. But if we look at just tillers overall, tiller attachments, it's generally ranking. We look at 2017, number 10, 2016, 12, 2015, 13, again, number 12 spot in 2014, and then a little higher, number 6 in 2013. So it's hovering, really around that 10 to 12 spot in terms of a popular attachment.
Okay, and then can you go through what the short line market is looking like for 2017?
If we look at some of those segments, rotary cutters is ranking very high. They were number 3. Tillers again was number 10. Some of the other segments, if you look at maybe finishing mowers, they ranked number 12, and this would be in terms of unit sales I'm referring to here. Sprayers, number 22, fertilizer spreaders, number 19. Things even like post hole diggers are number 16. So some of those short lines are in the top of or in the categories, 26 categories, ranking a little bit lower than the top 10.
Okay. And then what are some of the challenges or opportunities that dealers transitioning from smaller to larger organizations might face?
Well, I think you've seen from within the survey that employees are always a challenge for dealerships, regardless of size. Um, so a lot of the concerns we've been hearing recently this past year for sure has to do with the declining number of people, of the pool of employees that have some experience with equipment or within agriculture. And that will continue to decline as we get further and further away from some of these employees growing up on family farms. So that will be something that we'll really have to figure out. There's a story that we're doing in our spring issue where Williams Tractor down in Arkansas has done some partnerships with their local technical school. The employees or the students may not think that they want to go into an ag equipment dealership. They might be looking more at diesel mechanics for trucking, but if you just can, if they can get the good training and you could open their possibilities to what the careers might be at a dealership, it might be a way to address some of those training issues and those experience issues. Then just generally, you know, there are concerns about millennials and the work ethic, the different ways that they work. This will be something definitely that our dealers will have to figure out in terms of, you know, I know our dealers are struggling with things like, you know, mobile phones in the dealership. Some say they have to stay in the vehicle. You know, others realize that it's a necessary tool that their salespeople are doing. So that's definitely a challenge for dealers in terms of the millennials, but there's also some opportunities there because, you know, there are fresh ideas that younger people are bringing in. They're more technologically savvy. So they're also better at some of these new marketing methods just because of the experience they have. So those are definitely some opportunities that you can learn for some of the younger employees. And then other opportunities we've talked about several times throughout the dealership. You know, the economy is strong. The market continues to grow. There's new opportunities with financing, with leasing options. And then just definitely, I think it's a really, really great opportunity for dealers that you say that your customers are respecting your expertise. That says a lot for how you can make the most of every sale.
Okay, those are all the questions we had so far. So if anyone has any more questions they wanted to ask, we do have some time still. Otherwise, we'll start to wrap things up. So I'll just one last call for questions.
And one thing I'm interested too, if anybody wants to comment now that we're a couple months in, maybe what they're seeing in terms of some of this data and whether they're seeing that play out at their stores. And if you wanted to share some of those comments offline with me, I would definitely appreciate that. I'm also interested in what you might have to say about how some of the equipment is adapting this past year. I know GIE is a show that we attend every August, and there was a lot of interest this year in some comfort features like suspension seats and ergonomic controls. So I'm definitely interested to hear what you might have to say in terms of how your customers are accepting some of those.
Okay, well, that is all for today. Today's presentation and audio will be available on the Rural Lifestyle Dealer website in case you want to go back and review it. Also, keep an eye on your email and the Rural Lifestyle Dealer e-brief newsletter for more information. On behalf of Lynn and the entire Rural Lifestyle Dealer staff, thanks for joining us for today's webinar. When you leave the webinar, a short survey is going to pop up. Please let us know what you think of the live event and if there are any topics you'd like us to cover in future webinars. Please be sure to let us know. Thanks again, everyone, and enjoy the rest of your day.